World. So let's speak with Chris Conway. He's joining us from the Australian Stock Report, and he's live from Melbourne. Chris, welcome to the program. So in the previous weeks, we were talking about this lack of volatility. We were wondering what potentially the catalyst would be to bring it on. Obviously, we've always been talking about the U.S. Fed, but on Friday it really did seem as if there was a turning point. Do you put it down to commentary coming from those Fed speakers, or was it because it came in conjunction with the ECB holding pat and some of the talk coming from the ECB about a lack of further stimulus coming there?
Good morning, Nadine. Yeah, look, it's funny just that the very thing that caused low volatility, of course, everyone waiting for the Fed to give us some more commentary or make a decision, is the exact same thing that all of a sudden has caused heightened volatility. During that period over the last few weeks through our reporting season and the US reporting season, when volatility was low, there was still plenty going on. There was quite a lot going on. But the big issue was always waiting to see what the Fed was going to do. Of course, we get some commentary out on Friday night, as you rightly say, after the ECB said that there's no need for further stimulus, and all of a sudden there is upheaval. So in direct answer to your question, yeah, look, I absolutely think it was the comments from, I think it was Rosengren, the US Boston Fed president, on Friday that caused the turmoil. And it's a similar thing to what we saw last December. It's very interesting to note that when the Fed finally decided in December last year to raise rates, those 25 basis points, on the actual news itself there was a limited reaction or a muted reaction. But it was in the lead up that there was, a lot of consternation in market and some big moves. Of course, later in January we got some Chinese macro stuff, and there was a European credit sort of crunch in February, which saw markets dive about 8%. But it was interesting, on the news there wasn't a great deal of movement, but prior to there being a move there was a huge deal of movement. So it looks as though history is repeating itself.
We're seeing big moves in bond markets globally in the wake of some of the commentary coming from the US Fed. But we've also seen a sell down in yield plays. Utilities was the worst performing sector on the S&P 500. So what is that telling us about the market's psyche?
Yeah, well, so yield is definitely on the nose at the moment. There's no two ways about that. There's been a big shift in bond prices, as you said, particularly German and Japanese bonds. And I think it's a symptom of a trade that was overcrowded. The story was money's cheap, buy yield, buy bond proxies, buy growth plays. The market's starting to realise that the Fed is going to go either in September or December. My money is still on December for what it's worth. And there's a readjustment going on. So, yeah, in terms of the psyche of the market, I think today's local session is going to tell us a very big story. Obviously, the selling is going to be fairly brutal on the open. That's obvious. But it's really how the local market reacts that I'll be interested in. If we manage to rally from the lows and some bargain hunters move in and start picking up some stocks that have been beaten down, like say a CSL that's dropped from 120 to 100 in recent times, then it'll show that there's still some confidence in the market, and this might be a passing story as the market adjusts to, like I said, the September-December rate hike story. Alternatively, if we sell off aggressively on the open and we languish near the lows all day, or worse still, we sell off further, I think that's a pretty telling signal that there's a lot of confidence that has gone out of this market, and there's no one willing to step in. People won't know what to do.
Yeah, that would be a definite negative, wouldn't it? Because everything has a price, as you say. When you get CSL being sold down, you would think that bargain hunters, if there was confidence out there, would potentially move in to the market at some point.
Yeah, look, I absolutely agree. Look, I mean, obviously, like a CSL, like I said, some of the banks trading near their 12-month lows. There's seemingly a lot of opportunities out there. Some of these stocks in the top 20 that have been sold off very aggressively, they have pretty strong yields, so you'd expect some support, some fundamental yield support there. Some of even the growth stories, the bond proxies that have been absolutely hammered. It might take a brave person to step in and buy these stocks on a day like today, but today could be the day that presents the best opportunity to buy some of those stocks that have been beaten down. And like I said, absolutely, I think it tells a very telling story today. Whether people are willing to do that, or alternatively, if they aren't willing to do that, I think that tells a story in and of itself. So. Look, I don't have a strong conclusion either way as to which way it's going to go. I will say that I'll be watching with interest, and I think opportunities will flow accordingly.
Well, and that's the thing, is that we forget, while a lot of people lose money on days like Friday, volatility also presents a lot of opportunities, and really, you need opportunities in the market to sort of guide your thinking when it comes to investing. But also take into consideration, I guess, that the S&P ASX 200 has been underperforming U.S. markets anyways. I mean, we've had 4 weeks of consecutive losses for the S&P ASX 200. I mean, does that sort of set us up in better stead if we do see a continuation of volatility in the U.S. in the wake of this speech coming from Lael Brainard that everybody's looking forward to at about 3 a.m. local time here in Sydney? If the volatility continues overseas, do you think that the S&P ASX 200 has already baked in perhaps some of the negativity?
That is the million-dollar question, Nadine. I think that's the question. I think that's the only question sort of worth asking now in terms of the local market. You're 100% right. The S&P 500 in the US hasn't really done a lot until, of course, Friday night, where it was sold off drastically. But prior to that, it's sort of just been grinding sideways, as you say, while we'd been moving lower for the last 4 weeks. The selling we'd seen in Australia I wouldn't say was particularly aggressive. We were just sort of retracing into that 5,400 level. I thought there might have been some support at 5,300. That level will be obliterated this morning. We're set to open around 5,250. But yes, look, it is the million-dollar question. Have we already seen the worst of it? Or if the US continues to sell off, do we just sell off in unison with them? Again, I don't have a particularly strong conclusion on the matter. I do think, however, if we do continue to sell off, that opportunities will present themselves. Like I said, it's going to take some courage. You're going to need to sort of stand in front of an oncoming train. But I think there will be some opportunities just because, stocks are coming back to those sort of fundamental valuations with some strong yields that entice buying. They entice money off the sidelines. And that's the other part of this story as well. Whilst the Fed's about to probably raise interest rates 25 basis points, there's still a mountain of money sloshing around in the system out there, a mountain of it. So if it's going to come out of bond proxies and it's going to come out of those growth stocks, it has to go somewhere. A lot of it will go into the greenback, as we saw on Friday night. But, there might be a rotation within the market from, say, those bond proxies and those growth stories back into maybe the top 20, some of those safer, more defensive companies that have sold off, like the banks, like a CSL, maybe some back into commodities that have been unloved and have underperformed the rest of the market. So, some interesting things to look out for, I guess you'd say.
All right. Well, no shortage of things to talk about, and I'm sure you've got a busy day ahead of you. Chris, thanks for joining us.
Thank you, Nadine.
Chris Conway from the Australian Stock Report.